Traders, here's a new video. First of all, the risk warning: your invested capital may be at risk. Don't trade with money you cannot afford to lose, and this video is not investment advice. This video is another deep explanation video about the BOTT sure shots. And so let me see if I can show you, before I'm going to show you the trades about or the concept about the BOTT sure shot 8. Yes, first of all, you need the ebook. Get this ebook. You'll find the link in the description. It contains the most important candlestick pattern, chart pattern, and binary option turbo trading concepts, but also concepts which can be applied to Forex and digital options. Get this ebook. It's for free. And in the description, you'll find also the link to the Facebook group. Join the Facebook group. There you get you get your questions answered. And okay, let me see. I have to do a put here. If I get a rejection, okay, I don't do a put now because I'm pretty much sure that we are getting a rejection here from the 200 EMA and price will reverse at this point. So yes, join the Facebook group. I can only recommend this to you. There you get screenshots, answers to your questions, yes, and explanation of good trading setups. My Facebook group stuff is really amazing. I'm really proud of them. So join the Facebook group. Don't miss this opportunity, yes, and you will not regret it. So, okay, that was this trade here. You have seen how I have traded this evening star at the 200 EMA. Yes, I was pretty much sure that this will be in the money because the EMAs are flat, so it was not a strong trend, because reversal trading set up only in a healthy market, and that is what this sure shot 8 is about. Yes, BOTT sure shot 8 is about the Fibonacci level. Yes, and I'm going to explain you here how. So first of all, I have to show you the things which are important. You have to understand BOTT sure shot 1, BOTT sure shot 2, BOTT sure shot 3, and BOTT sure shot 4. Yes, these are the main ones, because that was the first ones, and this one which I'm going to explain to you now is this what is based on the same concept like BOTT sure shot 4. And important is to understand, and that I didn't mention before, is that you have to understand when I'm showing here, for example, this kind of image here, yes, of the EMAs. It doesn't mean that the EMAs have to be aligned in this direction. This means only that you have a strong downtrend, or a downtrend in general, yes. That means we have a uptrend, yes, in general. Not that the EMAs have to be aligned. Mostly it's enough that it's only the 20 EMA or the 50 EMA in this direction, and the other ones are looking down or up. It's not important that they are all in this direction, yes, because it's only important that you have a trend here, yes, a healthy trend, and here also a healthy trend, and here it's also important that you have nearly no trend, yes, so that this can be a good, only the minor trend is something. That is what you have to understand about this concept, yes, because this is only to show you the trend, yes, the trend at the market, that you have a trend, a downtrend, yes, because a major downtrend. It doesn't mean that the EMAs have to be shown this. So if you see that the trend is going down, it's already enough, because that would be, the minor trend would be only a retracement of the downtrend. That is what you have to understand, and that is what I'm telling you, that you have to watch the related videos about market condition, trend identification, and so on, which I have linked in the ebook on the specific pages. Try to get this knowledge before you're gonna handle the BOTT sure shots, yes, because I see almost everywhere people, traders, who trade those sure shots without the basic knowledge, and then they ask why it doesn't work. It worked not because you don't have understand the trend. You don't have not understand the market condition. Yes, that is what about. Yes, I cannot explain you everything in detail. You have also to get your imagination done, yes, and apply those concepts which I have explained here. That are only concepts. That is not a fixed thing. It's a concept. What I want to tell is you that at the end it's not like this what I am doing here. It's almost different. But this difference, yes, that is what you have to apply a concept on this. Yes, the concept is you have a major downtrend. and then if you get at some kind of Fibonacci level like the 261.8, then you get a reversal there. That is it, because the reversal will then in the direction of the major downtrend. That is the concept behind. Maybe I will do this in some later videos, or a little bit more explained. So, okay, now again, what was the important stuff? BOTT Sure Shot 1, yes, based on EMA is related to BOTT Sure Shot 5, related to Fibonacci. So the BOTT Sure Shot 2 EMA is related to BOTT Sure Shot 6 Fibonacci. So, and BOTT Sure Shot 3 is related to BOTT Sure Shot 7 Fibonacci, yes. This, and now we get a BOTT Sure Shot 4, which EMA, yes, is related to BOTT Sure Shot 8. So I will copy all those stuff here. So, and you see immediately, so let me draw this here, copy. So, and I will show you this also a little bit different, so you can you understand that it's not almost you cannot apply this only because of like mechanical. Yes, you have to think also a little bit. You have to use your brain, yes, for such kind of scenarios. So let me see what is going on here. We will remove this EMAs because they are not important, and you see here what's here important is. Important is here a healthy or a strong trend. Yes, that was not the case on the other one. On the other one you have only a healthy trend, yes, or weak trend. Here you need a strong trend. Why you need a strong trend? Because you are here on a strong area here. That is a strong support and resistance area, a Fibonacci level, a strong one, yes. And you have to break this strong one, yes. And it got broken, and if it broken, you need a confirmation from this kind of rejection, up and down, and then enter into a put, yes, because then you know that this Fibonacci level will act as, in this case, as resistance, yes, and in this case here as support level. That is the concept behind this. It's not nothing new, yes. That is the reason also why I try to do this Fibonacci stuff as soon as possible completed, because at the end the knowledge you should already have, yes, because that is what I'm praying all the day. And in every video, I'm telling you this all the time in all the videos, yes, the trend, the key level, the candlestick pattern, and the rejection, yes, that is what I'm telling you, and that is nothing new to you. So let me copy here this kind of Fibonacci area, yeah, Fibonacci level. So, and yes, let me see. It's at the end, it's not important what kind of Fibonacci level. You have only to be clear about the trend and how the candlestick is breaking through this area, yes. And so let me see, we will do this in this case, that I will apply this on the, okay, that is not good. We have to change this now. So let me draw here on, I will do this on this 161.8 Fibonacci level. So, and then that's at the end it's not important, we can let it so. Yes, the continuation, and then we are here below we have the 61.8, it's also okay. So we can let it be in this case, because the numbers are not important, yes, but I can do this like it would be mostly okay. That is okay. So then and the same scenario, yes, I will copy it from the other one. And the same scenario on the other one, and then I'm going to show you this live trading example, which is a little bit different, because I want to show you that it's not looking always like a textbook stuff, yes. So we can let it so we get here the breakthrough the 61.8 Fibonacci level. We break here through the 6.8 Fibonacci level, and then it's going up because we have a strong uptrend or a strong downtrend. And that 20 EMA is showing this, yes. This 20 EMA is showing that we have a strong down or uptrend, yes. But it could be also something else. For example, some kind of pin bar, some kind of gravestone doji, yes. a gravestone doji, a pin bar, is the same like a 20 EMA looking downward strong, yes, because that are candlesticks which are demonstrating the pressure of the market, those things where the market will heat, what the market will do, yes, that are those candlesticks, and that I'm going to show you now. But first of all, here we have to do this. Let me see. I want to copy here this kind of things here, so that it's completed, and then I will make it also available, this ebook again. But I want first to publish 2 or 3 other things, yes, which I try to complete it. So let's see if I will publish it immediately or I will wait till I have done a little bit more, because else it would be too fast. So okay, so we have here the difference to the other one is we have here a strong downtrend. Yes, we have in this case the 20 EMA, which is showing that we have only a strong downtrend. This has to show you only that we have a strong downtrend. The EMAs has not to be aligned in this case, yes, because we are talking here now about the Fibonacci, and there the EMAs are not important. Important is only that you understand that there is a strong trend, yes, and the same is valid for this one. So then you wait that the first candle breaks through this area here, yes, breaks through this area. Obviously look for price action on the left. It's almost good if there is no price action on the left, yes. So let me no price action on the left. This is always good, yes. And and then here on this scenario it was price action, so that was right. I have done the wrong. Here you need price action on the left, because more price action on the left, more the probability that it will be broken and will continue, yes. So that is right. I had done nearly an error here, yes, but this was right. There should be almost price action on the left, not so far away, yes, but it's not a must be. I have explained this also in the other one. It's not a must be because it's not so important. But if this candlestick is broken, this Fibonacci level is broken here, for example, yes, then you wait for the next candle to get above this Fibonacci level and get a rejection on this Fibonacci level, yes, and then you enter below this Fibonacci level into a trade, yes, and then you can expect that this will be in the money if you have a strong downtrend, yes, because then this Fibonacci level will act as here, this as a resistance, and this here will be act as support level, and that is how this concept works. So, and I'm going to show you now this example. There are no EMAs, and that has a reason, because I want to show you this without EMAs, because if you don't use the EMAs or to understand that it's not important. Important is that what I'm going to show you now. So we have here price action on the left, you see, that is already a good sign. So then we get the last 9 seconds, 8 seconds of this scenario here. Let me see. So we have a downtrend, you see we have a downtrend. So we have a downtrend, and the particular thing is here that this wick here, this pin bar, is telling the same like this one what I have explained to here with this kind of scenario. This is showing that we have a strong downtrend. It has not to be this kind of candlestick here, yes, this kind of candlestick. It can be every kind of candlestick, which is showing you that we have strong selling pressure. And this kind of candlestick is telling me, yes, in this scenario, in this downtrend here, yes, that we have selling pressure, and that is how you do the continuation trade, yes. Then you do a continuation trade and enter after price is gone above, you see, it's going above this level, yes, and then on the rejection downwards, you enter into a put, like I have done this. After the rejection from above here is going down, you enter into a put, yes, and then you trade the continuation of the trend in this direction, yes, or after the broken Fibonacci level, yes, and that is how it looks like. And the same scenario, and I'm going to show you this here, the same scenario which I have not traded, wait, so which I have not traded is here. You see this candlestick here, we have a downtrend. This candlestick here, yes, broke through this area. This candlestick here broke through this area, through this through this Fibonacci level here. Yes, this one broke through this Fibonacci level. Then this candlestick got a rejection above this Fibonacci level, the 23.6. Yes, this one here. Yes, and then you could do a continuation trade. Yes, after this, the same scenario like we have here. Yes, it gone above this level, broke through this, and then you enter on the next rejection and candle into a trade. And then you can expect that this will be in the money, because that is some kind of high probability trade, yes, because this kind of area will act then as resistance, or this area will act as resistance, and that's the reason why this then will work out. So this is a concept. The concept is logical, yes, it's based on logic. You can use this on every kind of Fibonacci level, yes, and if you are really creative, you can use this kind of scenario also on round numbers, on horizontal support and resistance areas, and all those kind of stuff. So I think that was clear. I have not a lot to say. Important is that you get the reference of the Sure Short 4, because the Sure Short 4 is related with the Sure Short 8. The Sure Short 3 is related with the Sure Short. The Sure Short 3 is related with the Sure Short 7. The Sure Short 3 2 is related with the Sure Short 6. And the Sure Short 1 is related with the Sure Short 5. Yes, that is the combination. You will understand this if you see them, because they are based on the same trend, on the same healthy market, on the same support and resistance area, yes, because at the end you have to understand that all those things are only support and resistance area, and they can be treated the same way, like EMA, Fibonacci level, support and resistance, horizontal, trend lines. Also trend lines can be used as this kind of sure shots, yes, and that is what's about. If you understand the concept, you can apply them also to round numbers, yes, and to all those kind of setups. So I would say that was enough. If you like this video, do a like. If you didn't subscribe, subscribe. And if you have something to say, join the Facebook group, write some comments. I'm happy to hear from you. I like to answer your questions. So I would say stay safe and bye-bye.